Hello and welcome. Time for another trading strategy video using the strategy buying low, selling high, using the 18 average as the indicator. The disclaimer in the more information box, of course, everything within your own risk, own reward. And I think it's a big advantage to just go through like a lot of these historical charts and just go to the situations. How would I have done? And would it have worked out? Go over different key situations. I'm going to start with code CURE, C-U-R-E, and I'm going to go back to pretty much the start of 2016. So scrolling through a little over 2 years worth of data. Okay, so let's talk about entry positions on two different fronts. The first front is as we are standing on February the 1st, 2018, Bitcoin prices are around 8,800 US dollars. Many of the alternate coins even doing worse. That's under the 18 average on the daily time frames on several of the codes, which is the indication of time to buy. So that is one interesting thing. And two, when you look at any type of code, that's how you start. So assuming it was the start of 2016 and you wanted to enter into this, it was easy from the get-go. You had the 18 average and price action was below it on several occasions. It was at the lows on several points. Never a bad time to say, you know what, I'll start here. Wait to sell when prices become higher. Two chances to sell up here. If you missed this, you had a lot of opportunity here to sell. Whether you were able to buy back at the 18 average of lows, that's a question mark. What is not a question mark is selling when you have the tremendous gains like you have in here. Guaranteed sell, guaranteed buyback. Guaranteed. How can you not see that big green candle in February and say, you know what, no, you sell. And then when you have the price action come sometime into the 18 average, late February, many days into March, your buyback was in place and a guaranteed multiple layers of sells. And it meant that with this 18 average band in which where it found support at the end of March into April, this part in here, that everything that you sold basically from here up, you were able to buy within that 18 average. Easily done. Of course, what you sold before then, you're not going to be able to buy this back in this time frame. However, you buy back at the end of March, start of April, you have another green candle up to follow through in here. You have to sell at points in some point in here, and whether you got the low or not, you know what? There's a good chance you buy in here, and you might not even get this low. Because you're like, oh man, I bought here, I want to go lower. And you want to go lower than that. That's normal, that's fine. However, you got a situation of the grinding down of the market. So you didn't buy near April the 16th. But sometime, maybe around May 10th, May 16th, anywhere near here, you just got to get another entry position within this strategy. Of course, looking to sell for profit above the 18 average of highs. I got 4 different slides that it's going to take to, or 5 even, I think, that's going to take to get to where we stand. So let's go down to the next one, which will be right after, of course, the June of 2016. And we left off at the market grinding lower, but in July of that year became selling. It's extremely easy to determine that when July comes in and the rallies play, you sell. You're going to buy for a profit what you sold much higher during the time it reaches the 18 average bands. And then in here, selling, easy buyback. How well did you do on this one? Now here's a situation where you got to ensure that if you sell at this high, which was fine to do, that you leave yourself to sell at some insane levels for this exact reason. And realize when markets like this occur, you often, or almost every time when it's done, and it usually can be within a day or two, that it's just going to go down really hard like this one did. And 18 average is an amazing spot to locate where support should be found. So it is very simple in this spot to sell at those highs, buy back in here sometime, sell a little bit in here, buy it back in here. Maybe you buy some in here. If you did, you're definitely going to sell on its rally after the 17th in here. But that's only if you were able to buy at the lower levels. And you can see that the buyback, maybe you didn't get the lower end. You wait till the 18 average of lows. So be it. But you're still not going to sell that until it comes through for another gain. Let's move on to the third slide, as this market has been going within a downtrend after a great gain, as we will be moving forward. And in November, it continued to head lower, all the way down to this point here where you're just going to have to buy some point in there, and that would enable you to get a little bit of sale at the end of November, start of December. But guaranteed, again, that selling in here resulted in a buyback somewhere in here. You had the option, now I can see why you wouldn't though, where you could sell at this top and buy back, but I could see why you'd want to wait for a bit better of gains that never would have arrived. Grinding down, so you probably get one extra buy order within the grind period, and then obvious sell, obvious buyback. But let's look at this even further. If you happen to be lucky enough to buy near the February lows in here, you have the opportunity to sell again if you're fortunate enough to buy in here, then again in here, and no matter where you would have bought after that, you would have not sold thereafter. And again, before the rally at the end of this, starting around the 17th, 18th of March, there was another opportunity to have a little bit of buying in. And definitely at the end of this, you're doing nothing but selling. I don't like buying at the 18 average of highs, so a couple sell orders at least. The type of rule of thumb is, okay, so your first selling is going to be here. Maybe you got your buy order in on this low. Awesome if you did. And then you're going to sell some maybe in here somewhere. And then you're probably going to sell some again in here. Of course, looking for the prices to go much lower. Oftentimes, you're going to get this very well, as you can see within this. So let's move on to the next one, as we are leaving April of 2017. And just looking at this, there was one buy opportunity in here before the last little bits of selling. But buybacks, that's where they come from. Little bits of short-term opportunities in here, whether you got them or not, well, it's up. Didn't really make much of, well, I'm not gonna say it didn't make much of a difference. It's fine not to take those ones, but this was easy to buy. But this was relatively easy to sell and buy back, in my opinion. And then when you start to notice this range, it can be hard to take. You're like, oh, just buy at the resistance, or sell at the resistance at the top and buy low. Well, quite frankly, this level here did two things. It didn't go to the 18 lows, and it didn't go down to previous support. I could see how you could easily not buy down here and be close but not get it. As far as markets are concerned, I have seen this over and over and over again on these big rallies that before, and I know it's not the biggest of rally, but a little bit of a failed move just before it comes into play. But everything sold amongst here, bought back before the beautiful rally, and it's guaranteed that everything you sold here and above, you're pretty much going to buy back instantly. But everything sold here, bought back here, even the stuff that you sold in here, you could buy back down in here. And then when you look at the moves further, April 16th, the market pumps up a little bit to over 7,000, comes back down a little bit. But the biggest one at the end of this chart has to go up to over 10,000, back down to 8. So you should definitely have had a sell order in that got hit, or we were paying attention to the market at the time where you could have sold at around 9,000 or so or higher, and then be able to buy back at the 18 average of lows. So when we take a look at this chart now, we can see it looks like it's breaking down below 53.16 as we enter into September. Let's go to the current chart. And sure enough, lower prices came into play. Seeing a lot of these situations which you can play for these spikes. Still active a little bit. The last one occurred in here. And yeah, the last one came in here. But as far as the strategy is concerned, it's very simple. Buying here. That one day that it goes way up, sell order city, you buy it all back throughout the months of November and December with one sell opportunity at the start of December. And then when December rolls through, past close to Christmas, sell time up to this high from this area here. Again, like I stated before, if you bought in here at these times, that would have worked out for successful extra sell opportunities. But I can see why you wouldn't have bought back until the day recently when it hit the 18 average of lows in here. Maybe a little bit more here. But you see, sell here, or excuse me, buy here, sell sometime amongst this green candle here. And you either bought back at the 18 average of lows or you're buying it back right now. You should probably have a sell order at the lowest around 7,000 because that's where the 18 average of highs, and that's only, of course, if you've pretty much bought now at these lows. You should have a sell order probably, I'm only showing so much of this, but I would think another little one around the 12,500 mark. And then maybe another one at 30, 60, 80, or 100, or 200,000. And seriously, yeah, go with like 20x gains, 30x gains. What's awesome is putting like 0.02 or something on a play, like buying for 0.02. And you might just small sell your first little bit for like little over 0.005 for Bitcoin. It's not much, but it's something. And it's, but you notice your largest sell order because you're going to sell maybe 22%, 23%, say somewhere here. I'm going to sell about 18, 19, 20% of it here, which is going to leave me 60% to sell at that insane level, realizing that if the markets don't go there, which it usually won't in a quick period of time, that is, then I'm going to have a sell order come in, and I'm just going to have to remove it when future sell orders come. So therefore, maybe I'd sell here, or that one spot near 7,000, don't buy back, then I sell amongst here. Well, if my next sell order above that is for like a 20x or even a 7x gain, what happens if it goes from 13 to say 19.7 or 21.4? I'm going to want to sell again. So if I sold, say, 22 tokens on the first sell order, then I'm selling, say, 19 or 20, I'm going to want to sell about 17 or so on the next one. And then after that, I'm going to sell about 15. So just work it in levels, sort of like that point as well. Breaking down below where we are in support, I'd probably be looking to be buying this next at around 4,000, 3,800 ballpark area. But yeah, that's just basic strategy. It's very simple with these moves. This is really what it comes down to. The fact that whether it take a day, 2 or 3 days, and even the ones like we've seen December to January, they just go up like so freakishly amazingly and come back so big like this. That really just, that's why you wait for those situations to happen and then play on them when they do. That's what I'm doing. So I'm just sharing, of course, the strategy in which I am implementing. So yeah, thank you for tuning in and have yourself a great day. Bye-bye.